think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show where we think, act, and prosper. Today I want to forewarn y'all, I am on my phone, but we're still going to get it in. My computer had to reset. It's been taking about an hour now. I don't know if that's the great reset or what, but we're going to get in it today with Gareth Soloway. We just want to thank you for coming back to the show. How have you been, man?
Hey, I've been doing really, really well. Really crazy market out there, but it makes things exciting, that's for sure. Thanks for having me back.
Yeah, definitely. I want to get your take on the State of the Union. You know, I heard President Biden, he threw out a few companies. I don't know if they got stake in those companies or stocks in those companies. I mean, GM and Ford, and I think Intel. Elon Musk sent a tweet out just saying like he provides jobs and stuff. He didn't really get, acknowledged during that. And, it's kind of interesting. I'm like, is there some type of stake in here these politicians probably got? What's your take on it?
Yeah, I mean, I highly doubt he would risk that conflict of interest showing up, but I certainly think that GM and Ford historically have been kind of the U.S. brands, right? Tesla's somewhat of a newer brand, even though it's a great brand. I also think that him and Elon Musk probably don't get along that well, so I think that that's probably part of it. Elon Musk said he was like a wet sock, or I don't know what the term was, but I'm sure that didn't sit well. So I mean, he can't be upset at the president for being like, oh, let's not mention Elon Musk. He just called him a wet sock or whatever. So I think that's most likely the case. But do some of these guys have? Some of them have exposure? Yes, I'm sure they do. But again, I doubt the president does directly.
Yeah. What about the lobbying? I mean, I know some of these, companies, they pump money behind politicians, campaigns and such. So I'm just like, I don't know, Gareth, man. I know these companies like to cut the check, and get these tax write-offs and stuff.
Yeah, and you're right. And there's absolutely so much money in politics. And honestly, we have the Supreme Court to thank for that. I mean, they really screwed it up in that one. I don't know how that one got through to thinking that was a good idea. But it really creates, an issue where big money has the ability to kind of push politicians in certain directions, which means it's not necessarily going to be the greater good. It's a horrible thing. I hope they change it eventually. I would love to see it, but the politicians are kind of not wanting it because they're getting millions and millions of dollars, right? So, and this goes for both sides of the aisle. I mean, listen, no one's innocent in this one. They all do it. But yeah, it's crappy. It really is, because there's so many issues in this world. You know that. I mean, we have so many issues that we're facing as a country, as a world. You need the best interests at heart and not big money at heart.
Mm-hmm. Yeah, I agree. I agree wholeheartedly with that. So let's see what's going on in the markets. What you got for the S&P? We heard the Fed coming out saying they're still gonna hike rates. I think it's 25 basis points or whatnot, which, I mean, there's been debates on whether it's 50, and then we have this whole thing with Russia and Ukraine develop or intensify. So what are you looking at right now?
Yeah, so nice little rally on Wall Street today, and I think the market is wondering if Putin is starting to get pushed to his limits. One of the things that made me more positive that there could be a resolution to the war in Ukraine is that it seemed like some of the oligarchs, these billionaires, were starting to come out and not necessarily go against Putin, because God knows you don't want to do that. You'll end up dead with poison or something like that. But it's more that they were saying, hey, we don't want a war. They're kind of walking that fence, which is probably the best they can do in this situation. And I think that's been one of the really good things about going after the oligarchs and their billions of dollars. When you restrict it, and I know Biden was talking about going after their yachts and all this. I mean, there's going to be pushback. And the question is, what does anyone gain, even in Russia, by taking over Ukraine? It sounds like a headache to me. They don't want to be taken over. I think Putin probably thought, falsely, that people were going to welcome Russia coming in. And again, it just to me sounds like a mess and something that generally these oligarchs don't want to be having to deal with, all these sanctions. So the S&P is rallying today. It's also because Jerome Powell testified in front of Congress. And if we zoom in on the charts, nice little update today, trading up about 2% on the S&P. And Jerome Powell initially, before Russia invaded, it was all about a 50 basis point hike in March. Now it's a 25. And he basically said that today. And that gave the market a little bit more confidence that he's not going to hike rates too quickly in the near term. So up, and away we go. The Nasdaq's also rallying. I don't think this is a long-term thing. In fact, I would expect that when you get a resolution in the Russia-Ukraine conflict, the markets will gap up that day, and that'll probably be the near-term top. And I'll be looking to short the market at that point.
Yeah, definitely. And that makes a lot of sense. So I've actually been doing something very, controversial. I've been buying some of the Russian equities. I don't know. I don't know if you have, but I mean, there's been, we have to be contrarian, investors. That's one piece of it. Yes. And those stocks are just getting killed, especially Luke Oil and Suburbank and a few of those. They've been getting killed. Robinhood, actually, I try to take advantage of Robinhood's commissionless, trading, and then they ended up halting the trades and stuff. So I had to go back to TD Ameritrade, and it's just crazy. What's your take on the Russian equities?
Yeah, so there's no doubt that they've been absolutely crushed. This is the RSX chart, right? And again, this is the ETF that tracks the Russian stock market. Now, the stock market itself has been closed now for the last 3 days. The central bank closed it. But because this ETF still trades here, it's basically telling you where it would have gone or where it likely would be based on current circumstances. So it's continued to collapse. Basically, 10 days ago, it was at $25 to $26. Today, it hit a low of $7 and change. I think pre-market, it got close to $6. I've been nibbling a little bit too on this ETF. I'm not quite gutsy enough to go into the stocks themselves yet, not because I don't think they're going to bounce back. I do think eventually this gets resolved, but I just worry, do they get delisted? I mean, are there certain additional steps that could be taken that would make it a little bit more risky? Again, I'm sure you're doing this, but I'm doing it as well, where I'm only committing a very small amount of capital. The upside reward, if things get worked out amicably, is massive. So, I mean, this ETF could go back to $20, in a day or two if things all of a sudden improve dramatically. So you could make, 100, 150% of upside, but also there's always the chance that it goes a lot lower. So for me, it's about risk assessment. There is a lot of risk, so I don't put a lot of money at stake, but I know that I can make a lot if it goes in my direction. But yeah, I don't fault anyone for dabbling. I mean, as long as we're all adults, right? We can understand the risks that we're putting ourselves at, and it might be a great reward situation.
Yeah, definitely. I was talking with my audience, just forewarning them. This is very risky. However, just even with the oil and the energy coming out of Russia, I mean, Russia producing a lot of the palladium, platinum,
yes, right,
and the energy that's being supplied to Europe. I'm just like, these companies are solid companies. I mean, they've always had good valuations, and now they're just cheap. I was actually watching an interview with Rick Rule and George Gammon, and they said that they were buying. This was about a week ago, so I don't know what they've done in recent, but I mean, they're very cheap, and so I was just like, hey, I'm just gonna see what happens.
Yeah, and again, I think that's fine too, especially at these levels. Like you have to figure that in 10 years, this is all. I mean, hopefully it's blown over in even 3 years or 1 year. And if you're okay holding on, I mean, when do you get the opportunity to make an investment where you could make 200, 300, 400% on some of these stocks? Even if it takes you a year, that's still an amazing reward potential there. And again, as long as you understand the risks, then I say all for it. Yeah.
Yeah, for sure. So what's your take on just how the markets reacted to this? So I mean, like, we've seen just huge volatility in general, and it doesn't seem like we got one clear direction or not. And I've seen you on your Twitter, call out a few different picks, especially Facebook. So I've started accumulating Facebook early. However, I just don't know how the interest rates are going to interact with these growth stocks.
Yeah, and you're right about that. So interestingly enough, and I'll throw out my Nasdaq 100 chart because I think it's worth noting, is that believe it or not, the low on the Nasdaq was when Russia first invaded, and a lot of people, this always catches them off guard. They're like, "Well, why the heck, when they first invaded, did it was it the lowest, and now it's gone basically up from there?" And the answer is because the market cares more about interest rates and the Federal Reserve than what's going on with Russia and Ukraine. And in other words, that the longer there's geo instability, the lower interest rates will stay for longer, which is what the stock market really wants. It's the drugs for the stock market, the printing of money. So that's why, and that's also why I think that, again, you'll see some sort of resolution at some point. The markets will have a big gap up, and then that's probably your shorting opportunity. Now, you're bringing up like a Facebook trade, which I'm in Facebook as well. And, there are certain growth. And again, is Facebook a growth stock or is it a value? I mean, who knows at this point? We're trying to figure that out. But at certain levels, I do think that Facebook is a good opportunity. Now, again, it certainly hasn't given us a huge reward just yet. But again, you're talking about a stock that trades at around a 15 forward PE, maybe even less. And those are the kinds of stocks where I want to be in them versus a high growth Tesla that still trades at like a 60 or an 80 PE ratio, where again, if rates go up, that PE ratio probably has to drop. So, look for the value stocks within technology. I think Facebook's one where they're now in the metaverse. And no one thinks, I heard right after their earnings, like, oh, they're not going to make money in the metaverse for 10 years. And that's what you want. If you're investing, you want expectations at rock bottom levels, because then if they can somehow make something good out of it, there's a lot of upside to be had. So like a Tesla, a Facebook, I even have a position in PayPal right now. PayPal down from $307 or $310 to basically $100. These are good quality names where they've been discounted to a point where I think you dabble in them a little. Absolutely.
Yeah, for sure. Yeah, I'm in PayPal as well. When I saw those huge like 50% off sales, and I'm like, these joints is on clearance, y'all. So
and you know what? That's the right mentality. Investors, for some reason, usually get caught up in the hype, right? So like they were buying, Bitcoin at 60 or 65,000 because people were saying, oh, it's going to 500,000 or 100,000. But in reality, it had just run up from 30 to 65. And you don't go to the store and say, hey, listen, I want to buy those pair of jeans that they just raised the price on from $50 to 500. Instead, you say, no, let me look for a good quality pair of jeans on sale. And that's the mentality that will make you a long-term successful investor when you start thinking like you do when you go to the store and shopping, where you want sales. You don't pay up for stuff, right? That is so important.
Yeah. So speaking of Bitcoin, you're still making bold calls based off the charts. For me, I've been averaging a little bit into Bitcoin, just a small amount, just weekly. But I also mine Bitcoin as well, and that kind of gives me a dollar cost average kind of thing. But I do have a long-term put on some of the Bitcoin mining stocks, just for long volatility. So nice. What are you looking at with Bitcoin?
Yeah, so Bitcoin is behaving just like the chart tells us it should, which by that I mean you had this great fall from the November high all the way down to this January low with very little bounce along the way. It also coincided with a perfectly parallel line. This line up here, perfectly parallel with this one, that gave us a major support right there. And then usually when you have such a big fall, usually what doesn't happen, you don't get a small bounce and then break down, right? The market has to kind of essentially consolidate. And that's exactly what it's doing. So in other words, what I expect from Bitcoin is probably for another month or two even, it could just be chopping like this, going up and down in this range, maybe even going a little bit higher as well. But overall, if you study technical analysis, you know that a down move like this with sideways chop is actually bearish, right? It's longer term or mid-term bearish. So after you get a lot of chop, I do think it's going to go lower. Eventually, you'll get the buy of your lifetime or my lifetime, which will be probably sub 20,000. And again, I will start accumulating down in that range. The only thing that would change my mind that we aren't in a winter, if you will, is that if we took out 69,000 again, then you have to assume it's a new bull market and we're off to the races again, which is possible. I just don't see it in the charts. The charts continue to tell me that ultimately we are in the .com period of crypto, and you have to flush out a lot of this crap stuff. I mean, again, I always say to people, like, why are there 15,000 cryptocurrencies out there? Where do we need this many cryptos? Why? You don't even need that many .coms. I mean, you got Google, you got Amazon, you got some other ones, but there were so many junk ones back in 99, 2000, and they ceased to exist. And then Amazon survived, Google. I mean, so many of the good ones survived and thrived.
Yeah, definitely. Yeah, and I'm ready for the buy of my lifetime too. I mean, I bought in what was it, early 2020, and I sold it for little profits. I was just like, I didn't really understand it then, and I'm like kicking myself. Like now, I think I looked at my Cash App. I put like $1 in Bitcoin, and it ended up being like $7.
That's really good.
When I cashed it out, and I was like, wow, like what was I thinking? So we're gonna expect a correction there. So Bitcoin's kind of been acting as a safe haven. It seems like with the Ukraine thing going on. I mean, Bitcoin and gold have both been going up together, which has been interesting. And so so I'm just interested in how it's all going to play out.
Yeah, so you're absolutely right. Is that gold was going up without Bitcoin prior to the Russia invasion of Ukraine, and then people started to connect the dots, and I think very, very worthwhile that the sanctions on Russia about locking down accounts and so forth. Well, if these oligarchs, these billionaires put their money in Bitcoin, they can really have access to it anywhere in the world without sanctions. And you absolutely saw a jump in addresses holding, 1,000 Bitcoin or more. And it probably is why Bitcoin has had a recent move to the upside. In addition, I think it's the perfect use case. Like geo instability makes Bitcoin a no-brainer in many ways. Now, again, this doesn't change my near-term, my mid-term outlook of that eventually we're going to see more downside. But again, I think it builds another building block for cryptocurrency over the long term, where I do see crypto going to 500,000 on Bitcoin or even higher. Again, these are the types of things that you have to build a base for why it's so important. Why is Bitcoin so important? And this is another example of that. And again, the dollar, the printing of the Federal Reserve, and the government spending, I mean, these are all key foundational points of why Bitcoin long-term should survive and thrive.
Yeah, definitely. Yes, it's helping contribute to that foundation. And Bitcoin hasn't experienced anything like this. And so at first we saw that sell-off, and then people started coming to their senses and stuff. So yeah. It's definitely helping the foundation. So what's up with gold? I mean, I've been enjoying like the run up that we've been having. I expect it to go higher. What's the charts telling you on there? Are you still looking for a bullish year for gold?
Yeah, I still think that gold will be the best performer between the stock market and Bitcoin for this year. So far, I believe it is at this point. It has broken out, so I think it's important to recognize that you have this connector line connecting these highs here. You have this point here, this point right in here, and obviously the top, and you have now broken out of that range. So I do think, again, once you see some sort of resolution, you probably get a drop in gold, but the drop should take you back to kind of what we would refer to as the scene of the crime, which is this downsloping trend line. And then once you get there, it becomes a huge buy again for the next leg to the upside. And my guess is you'll head right back to that 2020 high around 2075 on spot gold. But yeah, I mean, so far the charts are playing out exactly like the 1970s charts. If you match up inflation with the last time we had inflation like this, which was mid 70s into the 80s, I mean, it is literally 2 years of up move, which was 2018 to 2020 in gold. I can actually show that here on the chart. So you had this move up here, 2 years up, 2 years of consolidation here, and now the breakout. And if you look in 1973 to 75, you had the same up move as 2018 to 2020. And then you had from 75 to 77, a down sideways move. And then you broke out and had this monstrous move in gold. So I'm calling for a repeat of that, not necessarily percentage-wise. I think back then gold went from like $100 to $900. If that happens, that would blow my mind even. But could gold go to $3,000 to $5,000 an ounce in the next few years? Yeah, I do think it very likely will see 5,000 in the next 3 or 4 years.
Yeah, that makes a lot of sense. I hold some shares, but I mostly hold physical, just to be a little bit out of the system, with Bitcoin
I'm with you on that. I have some, obviously, the swing trading I do is, I need to get in and get out very quickly. It's very hard to get in and get out of physical gold. You got to go to your pawn shop or wherever the heck,
Yeah, yeah.
but you're not going to get a great price for it, obviously. So the swing trading should be done through GDX, which is miners, or GLD usually. There's even a crypto that supposedly tracks gold, although I haven't looked into the details enough to know if it's good. But then, yeah, the physical stuff is like, if stuff really hits the fan, if the grid goes down, if things are really messed up, I love having that gold on hand where at least you have some buying power out there in the real world. History for thousands of years has shown us that gold is that.
Yeah, especially with the bank runs. I mean, Russia's been seeing the ruble just like getting decimated, and people going out and they're taking everything out.
You're 100% right. Yeah, I mean, again, it's a great use case for, and you could argue, like, as we enter this new kind of cyber risk environment, that yeah, Bitcoin eventually I do think is a digital gold, but really, if the grid goes down and you didn't store your Bitcoin separately, you may not be able to have access to it. And it's good to just have some gold. So, there's so many people that are like, oh, you got to be 100% on Bitcoin or 100% on gold. I'm like, no, you know what? They can coexist together. It's great. They almost complement each other in terms of, like, if the grid goes down, you got your gold, but if not, then you got your Bitcoin. Like, it's perfect.
Mm-hmm. Yeah. I think one of my I talked with Doomberg about just kind of the risk of with cryptocurrencies using the traditional banking system, and we saw like what happened in Canada, where they started. I mean, these institutions they have regulations they have to adhere to. And when you can't cash out your Bitcoin to this bank or whatnot, then it becomes troublesome unless you have like an offshore account or account in another country or whatnot.
That's right. And that just shows you that, I mean, everyone, I still remember years ago and even recently is everyone was like, oh, well, crypto is decentralized and it's so great because it's not controlled by anyone. But it kind of is in a weird way. It's still, and you just have to be aware of that. I still think, again, I don't think the government will ever ban it or anything, but I think that you have to just be aware that you just don't want to have everything in Bitcoin, because then you're leaving yourself open to potential issues in another area.
Yeah, exactly. So what's up with silver? I have quite a few silver bugs. I had some people ask about silver before, and we know that it lags when it follows gold. But I mean, I just want to see what the charts say.
Yeah, so charts show short term. We do have a breakout on silver. Again, I've been much more into buying gold than silver recently, because I just continue to get stuck on the fact that silver is partially industrial, right? It's a store of safety. It's a metal that reacts to inflation, but at the same time, it's used in car batteries, especially electric cars and things like that. So you have this kind of, if all of a sudden the Fed raises rates and the economy slows, is it possible that you wouldn't get as big a bang for your buck in silver in the near term? Now, long-term silver probably does outperform gold. It has a history of doing that. But in the near term, I've been a little bit more kind of like, all right, let me just see how things go. How does the economy react to the Fed tightening before I commit a lot to silver? Now, I still hold physical silver, right? I still hold the stuff that I hold is not something I'm getting rid of in and out. We're talking more swing trades. Do I buy more at this point? And the answer for me, at least, is not right now, even though it has broken out per the chart.
Mm-hmm. Okay, that makes a lot of sense. Yeah, silver can be very volatile and everything. So it's interesting.
Yeah.
I want to just kind of point out a tweet you had tweeted about your service with the verified investing and crypto alerts, and someone had responded and they asked about do you ever hold stocks for life?
Yeah.
And that was kind of interesting. I was like, let me see. I see one reply. Let me see what Gareth said on that.
Yeah.
So what's your take on that? So like, obviously, as a trader, you can take profits, and then you have dips and you can take profits and you can keep rinse and repeat. Long-term holding, a lot of times you have to endure the dips and endure like all those things and keep buying in and such. So how do you, what's your take on that as a trader?
Yeah, and it's a great question. And so listen, I mean, I think you have to decide what kind of investor you are. Are you the more of a trading investor or a swing trader, in which case you're in and out more, or are you working a 9 to 5 job and you can't really pay attention to the market, in which case you need to just hold stocks for a longer period of time. I'm more of the type, I'm sitting behind my computer every single day for 10 hours, 12 hours plus a day. I'm always monitoring the markets. So for me, it's very hard to stay in a stock long term when I see it run up because of a thesis I have, and it runs up into resistance. Let's say it goes up 40%, and I see the chart telling me it's going to pull back 10 or 20%. And I'm watching it, and it's like, well, why wouldn't I just sell and then just rebuy even at a 10% discount and then just get right back in? So there are stocks that I like that I'll be in and out constantly on the way up. But I find that because I can monitor the charts and read the charts, I can do much, much better by buying low and selling high, waiting for a retrace, buying again, selling higher, and doing it like that. So for me, it's much more of that mentality of when I can save myself that 20% drawdown, I might as well. I mean, it would almost kill me to be like, all right, I'm going to hold this even though I know it's going to pull back 20%. Doesn't make sense, right? So again, that's me. That's not every investor out there. You guys everyone has to look and say, okay, can I monitor the market? Do I know how to read the charts well enough to do this? Because if you don't know how to read the charts, then honestly, you'll probably get out at the wrong time and get back in at the wrong time. So really make sure that you do know how to.
Yeah, for sure. Yes, because a few of the companies, I'm like, man, we got this so cheap. Should I take profits? One of them I had a hard time with. That was the Square. I took profits on it. I got the alert. I took profits, and then we saw it go up higher. And kind of just just trying to keep that perspective of not timing tops, not timing bottoms.
Yeah, and honestly, I can't even write, and that's a good point. I can't. I'm never going to sell, or only by luck do I ever sell at the exact high or buy at the exact low. I just want to get in the range, right? You just want to kind of get in the range. And I love the fact, like you brought up Square, when it reported earnings, we had that and it just jumped up tremendously. And I kind of say to myself, like, could this go up another $3? Yeah, it could. But at the same time, when you're up 30 or 40, whatever you're up in terms of percentages, you say, all right, let me not get greedy and let me just book it. And then there's always another trade. Always remind yourself that investors always have a tough time of understanding that they think this is the last trade on earth and they have to stick with it. But in essence, tomorrow there'll be another setup. The next day there'll be another one. So if you get rid of this, you free up your capital to do something that could even be better at that point. And oftentimes it will be.
Yeah, definitely. Well, Gareth, could you talk a little bit about your services and everything?
Yeah, sure. So I have two websites. InTheMoneyStocks.com is the stock one. And again, basically there's a service on there called Verified Investing Alerts. And essentially what it is I put out my trades. So as I buy and sell, I put out my buys and sells, and people can basically just piggyback off my alerts. I also do a daily video where I go over technical analysis, we go over charts, we go over trade setups. It's awesomely educational. And then the other site here that I like to mention is Verified Investing Alert, VerifiedInvestingCrypto.com, which I just launched in November. And it's basically the same structure. When I buy a crypto, when I sell it, I put out an alert, give my exact entry and exit prices. And basically I do a video every single day as well. And here you can see, again, it kind of talks about what you get. And then I even show my track record. I mean, here's my track record. Every trade we've made and we've exited here is right on the website for total transparency. You can talk to anyone who's been in the service. They'll tell you that it's exactly the way it is. And, it's not that we don't take losses. I certainly do. But by looking at the charts, I'm able to really minimize the risks, not eliminate them, but minimize them so we can mostly have gains. And that's just wealth creation, right? I'm not looking to hit a home run. I want singles and doubles consistently, which will make us into all millionaires at some point.
Yeah, definitely. That's good to hear. So what's kind of some of your let's get a character trait out there. So you've been getting a lot of attention lately. You've been on Bloomberg and Stansberry, Kitco, and Yahoo, and everything. And what's some of those tips that helps keep you humble and keep you down to earth to connect with just your people? I mean, people that you invest with, people that you send alerts to. I'm sure just average people that I mean, some people may be more maybe more wealthy or advanced, but I'm sure you got some people in there that that are average, maybe working a 9 to 5, trying to get out of there or whatnot. So what's kind of some of your character traits you?
Yeah, so I mean, the number one thing that keeps me humble is the market, right? I mean, as many years as I've traded now, 20 plus years, right? I still get in trades and I still see my P&L go negative first, right? So not always, but a lot of times I'll be down significantly on a trade, and that market has a way of humbling you. If you think you're at the top of the world, just wait, because the market will smack you around big time. And that just amazingly keeps you humble. It makes me smart enough, even at this stage of my career, that when I go in a trade, I never allocate 100% of what I want in that trade at the first buy or the first short. So usually what I'll do is I'll say, okay, I'm going to put $100,000 in, let's say, Bitcoin. Here is my first level where I'll buy $25,000. Now, I think it should hold this level. I hope it holds this level. I hope it goes to $1 million. But if not, I'm going to leave 75 on the sidelines to add more. And again, crazy enough, but charts tend to pierce levels. They tend to go to next levels because greed and fear is so powerful. And so you give yourself the ability to essentially trade around the trade, average in, dollar cost average. And it keeps you humble, but then it puts you in a position where you generally can have an average where you can do very, very well. And I think, again, I remember where I came from, as an investor starting out. I didn't have a lot of money when I started investing. $10,000 is when I started trading. And I see people constantly out there. And the best thing for me is someone who wants to learn, right? I will take my time to teach if I see that in someone. For me, the worst is when people come to me and they're like, all right, give me 1 million winners and make me a zillionaire. And it's like, dude, like, come on, man. Like, I feel like I'm just, I don't know. But people that want to learn, I'm always there for you guys. I'll do my best. I'm super busy, but I'll do my best to teach you the methods so that you can avoid a lot of the pitfalls that I took.
Yeah, definitely. Yeah, and then I just testified just to doing the course on in the money stocks and just kind of learning like some of the trend lines and head and shoulders patterns and all those different things. And I have to go back and kind of read because it's a lot, I have to go back and read my notes and stuff, but it was definitely helpful in being able to bring that to my audience too. And sometimes it's hard trying to build that confidence. You're like, okay, I'm looking at this chart. What are other right. Master traders, thinking about and stuff. I'm just a newbie at this, so it's sometimes hard.
You're doing the right thing. You're learning, right? So, I mean, I can't stress that enough is like, and I love that you take notes. Like, I mean, there's a difference between people that are going to succeed in this business and people that won't. The people that won't, they don't want to pay for the education. They just want to get in and do it. The market's going to make you pay a lot more than any education that you could buy. I mean, that's for sure. So always remember that and spend time. Just like a brain surgeon doesn't walk in and start operating on a brain. They got to go through years and years of study, right?
Yeah, definitely. Well, Gareth, I appreciate you for coming on and talking with the audience, showing us your charts and everything. Everybody be sure to go check him out. Follow him on Twitter. He does post some plays and some trades that he may get into. He does get some freebies out there, y'all. So be sure to go follow him on Twitter. What's your Twitter handle again?
At Gareth Soloway. So just at my first name, last name, super simple. And thank you so much for having me. I have a great time chatting with you, and I look forward to our next chat.
Yeah, definitely. All right, man. You take care.
Take care, buddy.